Samsung, nah mate, more like Samsings.
She was more like a beauty queen from a movie scene.
So Samsung, we have seen a decline of this company within the last year, with the year-to-date chart showing minus 31%. What is the reason for this? We're going to find out in this video. We're also going to be finding out where it is potentially going to be heading in the next few years, or in the short term, months. Before we get started, I am not a financial advisor. This is not financial advice. This is just for entertainment purposes only. Please do like and subscribe. It would be greatly appreciated. With that being said, let's get into the video. So on the 5-year chart, Samsung is only up 6.35% with a massive decline in this year. However, since about the year 2000, they are currently up 793%. So overall, they're still doing relatively well. This is just a sudden drop recently. So what is the reason for this? Let's find out. I'm going to be showing you a CNBC video here. The video is titled "Samsung Struggle to Execute as They Have in the Past," analysts say. So let's play this video for you now.
Samsung has been very much dominant in DRAM, but Hynix has very much stolen, their Korean peer has very much stolen a march in terms of high bandwidth memory, and Samsung's really not been able to execute as they have in the past. And so yeah, it is a loss for the moment. There are thoughts, and there's constant press that they are going to get approval from Nvidia for their high bandwidth memory, but so far it's been waiting for Godot, I'm afraid, for them. The other problem, of course, for Samsung is in traditional DRAM. They're also seeing competition from Chinese domestic, so CXMT, and that has put pressure on the DRAM price. Of course, you've got to remember the DRAM price is a commodity, and so it's very sensitive to supply and demand. So there's also been some concerns about oversupply and some concerns about weakness in demand. So none of that is particularly good for Samsung's memory business.
Ben, the language we had today from the Vice Chairman of the Device Solutions Division, I thought was interesting, touching on the talk of crisis in the industry around competitiveness and saying these are testing times. To me, it says that everything that has come before may not be a given for what comes in future. We've had a business here that's been hugely diversified thanks to the chip side of the business with the hardware parts of the business. Is it now potentially a curse to have such a large-scale exposure to one arm where you are seeing this commoditization thanks to AI?
Well, yeah, I mean, look, the memory business is a boom and bust industry, I'm afraid. It goes from very profitable to not profitable at all through a cycle. And so it depends on when you look at it. You're right, Samsung is diversified into, televisions and it's got a foundry business and obviously lots of consumer electronics and so forth. I think the whole business has been in a little bit of crisis. You've seen quite a lot of management change and people hoping that, they can improve execution there. So I'm not surprised, first of all, by the weak numbers. I'm not surprised by the apology. The other thing you've got to remember is they also compete with TSMC. They have a foundry business for making, chips for themselves and for other people. And that's been, not been executing quite as well as TSMC. So they basically face some quite big competitive threats. TSMC on the logic side, Hynix and the Chinese on the memory side. And then, in smartphones as well, there's always the resurgence of Huawei has been an issue for them as well. So it is a much tougher environment for Samsung.
Typically, Samsung is in the lead within the smartphone market. However, this could be starting to change with Apple catching up in the late Q3 stage of this year, with Samsung being the only smartphone manufacturing company to see sales fall in the last year. These graphics are from TLDR Business. Moving away from the smartphone market, we can see semiconductor markets. Samsung is definitely still in the lead of this, even beating the likes of Nvidia and TMC, boasting a $200 billion revenue. So whilst Apple has a grip on the Western hemisphere within the smartphone world, the Chinese competition and the Southeast Asian competition is rising with the likes of Oppo, Vivo and Xiaomi. And this is of course where they make most of their sales, so they are having big difficulties in their own region. So now I've changed the background, so that means one thing. Let's move on to the financials for this company and see where exactly the numbers are taking them. So starting off with the liquidity rate, Samsung have an outstanding one. They have a liquidity rate of at the highs of 20 and the lows of 12, which is crazy. Ideally you want this to be 1, so for them to be around 12 to 20 is ridiculous. And the trend lines predict this to increase again, with them having a very stable debt and cash is set to increase according to the trend lines. So essentially this is very good. Now moving on to a retention rate, this is how much money is kept within the company. Again, this is very good. Ideally you want to see this around 10, if not higher, for a company the size of Samsung, and they are definitely obtaining this, and the trend lines are also predicting this to increase over the next quarter. And finally we have the free cash flow. Again, this is very good, and it doesn't seem that between operating and free they're actually doing anything with their free cash flow, so it's very interesting. However, again, the trend lines are predicting this to increase, so looking at the finances for Samsung, there is nothing to be worried of. In fact, they are incredibly strong, which is what you would expect. So it does beg the question, why is there such a big sell-off in the price of their stock? Does it mean that it's a really cheap time to buy in? Let's find out. This is where things start to take a turn for the worse for Samsung, as this is where you as an investor will be mostly concerned with. So here we can see volume to price on an exponential chart. Here we can see volume is set to be increasing and is very volatile, whilst the price is set to decrease. So this is not an ideal situation for... Why am I drawing? Okay, this is not an ideal situation for Samsung, as the price and volatility is definitely going hand in hand in a negative direction. And looking on a closer 91-day chart, we can see exactly the same thing. Looking at some of the figures for Samsung, we can see a PE ratio of 0, a 52-week high of 1,612 and a low of 892, and we are currently at, where are we, 955, and there is a difference between the high and low of $720. The beta is on 1.06, that means it will outperform on a volatility scale the current ETF in which it's situated in. This can be seen as either positive or negative. In the case of Samsung, I would definitely say it's a negative thing at the moment. So now looking at short-term benefits within Samsung, we can use the Sharpe and Sortino ratio, which will show us the short-term risk to reward, and this is really not an ideal outcome for Samsung, as it is at minus 8.45. That essentially means don't put your money in it if you're looking to be in for a week. And the Amiga ratio shows up as 1, which is also not ideal, as you want to see this around a 3 mark. So not ideal for Samsung on short term. However, I am not a short-term trader in the slightest. However, this does look very bullish, this little flag here. Typically, from what I see, you can expect these to rise up again, but again, I'm not in the world of short-term at the moment, so let me know what you know about that in the comments. And based off of 37 analysts here, we can see a ranking of a buy, which I do say I have to agree with. I wouldn't say it's a strong buy, as I don't see there being a massive growth in this company within the next couple months. However, long term, I do always see there being a huge growth in Samsung, as they are massive in semiconductors, smartphone, and just technology in general. So the world is very, I mean, even Apple relies on Samsung for parts for their phones, such as the OLED screens. So that concludes my analysis of Samsung. I do think it will rise, as I just said. I will give it a short-term ranking of an E, just because it is hard to say it will take a rise in the next month. I don't see there being a reason for it to, unless the Q4 report is really good, which I do expect it to be better than expected. However, I don't see it being astounding to the point where it will flip the stock upside down and hike up to the moon. I don't see that happening at all. I will give it a long-term ranking of a B to C. Let's say C+, just because it is a very strong company and there is much dependence on Samsung. However, with the competitors within the smartphone world at the moment taking over their Chinese reliance, essentially, it's hard to see that it's going to happen within the next 6 months, maybe after that. But it's definitely a strong stock. There's no chance of it collapsing, to say, I think it will be perfectly fine. So if you do have your money in Samsung and you got in at an early point, definitely hold. I don't think this is the end for Samsung at all. In fact, I know it's not. It just wouldn't make sense for it to be. So that concludes this video. Again, I'm not a financial advisor. None of this is financial advice. You should always do your own research before buying into a stock. If you could leave a like and subscribe, it would be greatly appreciated. With that being said, I'll see you for the next video.